Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting. The course code for this subject is BS 363. This is lecture number 29. The topic for today's discussion is accounting entries in the books of hire purchaser and as well as the accounting entries in the books of hire vendor. The outline of this lecture consists of the entries pertaining to the books of hire purchaser and as well as the accounting entries in the books of vendor, that is how to record the hire purchase agreement and sale and then subsequent payments or installations. Not installation, actually installments by the hire purchaser in the books of hire purchaser and as well as in the books of hire vendor. Let's discuss the entries in the books of hire purchaser. Basically, there are two methods to record accounting entries in the books of hire purchaser. Number first is when the asset is recorded at its full cash price. Like the moment the contract has been taken into consideration, the hire purchaser record the full cash price of the asset in its books of account. And the second method is when the asset is recorded at the cash price actually paid. In the second method, the hire purchaser slowly and gradually with respect to the installments actually capitalize the asset purchased in its book of account. Let's discuss the first method when the asset is recorded at full cash price by the hire purchaser. In order to understand this, we have to assume certain numerical values or make a case regarding this hire purchase agreement. So the hire purchase value, before starting these journal entries, I will highly recommend you to listen to my previous lecture on the basics and concept of hire purchase agreement and system. So I assume that you have listened to that lecture so that you may be able to understand the specific terms used in the hire purchase agreement for purchaser and vendor. So the hire purchase value, let's start over here. The hire purchase value assumed over here is 1000 rupees for a machine. And the cash value for the same machine is 800 rupees. And the annual interest rate charged by the vendor for this hire purchase agreement is 3.125% per year. Now let's discuss how the hire purchaser record entries in different cases at different time spans. Number first is on entering into the contract and making down payment. On purchase of assets, the hire purchaser will debit the relevant asset account by 1000 rupees, as we have assumed that the hire purchase value is 1000, and the hire purchaser in its books of account will credit to the hire vendor account the same amount due, which is 1000 rupees. This hire vendor account is the account payable or liability of the hire purchaser. Therefore, when there is increase in the liability, it is recorded as credit entry. Similarly, when there is increase in asset account, it is recorded by a debit entry. So same has been done by us. And then at the end of each journal entry, one is required to put a shortest, concise and precise narration regarding what has been happened in the above two entries. So same has been written for the explanation with full cash price of the assets. Subsequently, the hire purchaser is required to make another entry for the down payment made for this installment agreement. So the hire vendor account, what was the total liability of the purchaser? There will be decrease in the liability of the hire purchaser, and the down payment decided between the two parties is 200. So we have debited our liability by 200 because the hire purchaser has actually paid this obligation to the vendor. There is a credit entry in the books of account of the hire purchaser with the title of either cash account or the bank account. And when there is decrease in the asset account of the hire purchaser, he will record this entry as a credit entry. The shortest narration explains with the actual cash down payment. So here in this hire purchase agreement, the down payment was decided, DP we can write down over here. The down payment was decided as 200 rupees. And for the rest of the amounts pertaining to 1000 of the total hire purchase price shall be paid in annual installments. So in the subsequent year, the next year at the completion of, rather I must say at the completion of first year or in the subsequent years, these two entries will keep on recording until the hire purchase agreement become fulfilled. The second entry in the books of hire purchaser will be to record the interest due on this agreement. Since the interest rate decided between the two parties is 3.125% per year, so the interest account in the books of purchaser of this asset will be debited because this is an expense account of the hire purchaser, and when there is increase in the expenses, it is recorded as a debit entry. So we have done the same. We have put interest account in the debit column. Similarly, this interest is due to the vendor who has sold this asset to us. So the liability will be generated with the title hire vendor, which is pertaining to the interest amount due to the vendor. So when there is increase in the liability, it is recorded as a credit entry. And the shortest narration explains the interest due at the end of the year. This is the interest accrual entry, and then subsequent entry will be for interest payment to the vendor. So payment of installment, we knew that the installment decided between or for the first year and is rupees 200. It will be given in the question or numerical case. For each year, the installment value will clearly be mentioned in the illustration or numerical example. So we have to calculate the interest rate in that installment if that is inclusive of that total installment payment. However, if that installment is exclusive of the interest, then we have to calculate the interest due on the amount outstanding. So we knew that in this case the amount outstanding after payment of down payment was 800, and we can calculate our interest accrual by multiplying this outstanding balance with the interest rate on this hire purchase agreement, and therefore we can come up with rupees 25 as our first year end interest payment. Now in the subsequent entry, we will record the interest payment. This hire vendor account, which was the liability account, included with 25 rupees along with the annual installment of rupees 200. So in sum up, we have to pay out rupees 225 of annual installment to the vendor on this hire purchase. Therefore, the liability has been reduced by rupees 225. Therefore, it is recorded as debit entry, and the purchaser's account has been credited. Purchaser's cash or bank account has been credited because their asset has been reduced, or the liability of the hire purchaser has been paid out with the amount due. So this is the way how the hire purchaser record these entries at full cash price. The second method is related with when the asset is recorded at cash price actually paid gradually. In this method, the hire purchaser actually capitalized the asset purchase slowly and gradually according to what they actually paid over the period of time. So in this method, on payment of sum of the money at the time of delivery of the goods, the following two entries will be passed at the time of agreement and then the subsequent down payment. So what are those entries? The same example continues over here. The hire purchase price was 1000, cash value is rupees 800, 200 is the down payment at the time of contract agreement, and the interest rate is 3.125. So the hire purchaser will record the first entry for the down payment. The asset has been debited. Since we have to record the actual payment year wise and year to year, therefore we have debited rupees 200 of the down payment and have capitalized the asset account up to the amount what we have paid. Then the hire vendor account, which is the account payable or liability of the hire purchaser, will record in its books of account the same 200 amount which they have to pay in the subsequent entry. This was first recording of the down payment entry with being amount payable to the vendor upon the delivery of the goods. Then the hire purchaser will make another subsequent entry to record the payment of the down payment or down installment. Therefore, the same liability will be written off, and when there is decrease in the liability account, which is hire vendor account over here, it has been recorded by debit and it has been paid in terms of cash. So we can either credit our cash account, which is an asset account, or the bank account of the company by same rupees 200, and hence we have actually capitalized the amount what we have paid for this hire purchase agreement. So this is the second method. And for the subsequent years, for installment payment and as well as the interest amount to due, we have to follow this pattern to divide the amount of installment between the contribution, number first, the contribution towards the cash price and the payment of interest due. So the first is to debit the asset account and then to interest account. Since the interest is an expense for the hire purchaser, therefore following entries will be recorded in the books of hire purchaser. The first one is on hire purchase installment become due. 1 year has been passed and we have to record the hire purchase installment entry. Here the hire purchaser will have to make or pay another 200 rupees as decided in the deal. So the asset will be capitalized by rupees 200 and therefore an increase in asset is recorded by debit. And then the hire purchaser will have to record the interest expense entry, and since when there is an increase in the expense account of the hire purchaser, it is recorded as debit. For the credit entry, the hire purchaser will increase the liability account of the vendor in its books of account with the title of hire vendor account. Since this is our liability and therefore increase in liability is recorded as credit, therefore we have written or have recorded the hire vendor account with a credit entry of rupees 225. Bear in your mind that we have assumed these values for the down payment for interest rate and the hire purchase accumulated value along with the cash value of this machine or asset. So this is the way how the first installment will be recorded, and then the payment entry will be recorded by the hire purchaser in the subsequent step. So upon the payment of the installment, the liability generated by the hire purchaser will be given a cross entry so that this liability may be written off. Therefore, the hire vendor account, which is the liability account of the company, will subsequently be reduced, and when there is a reduction in the liability, it is recorded as debit. So therefore, we have recorded this value rupees 225 in our debit column. And why this liability has been reduced? Because we had made a cash payment to the vendor. Therefore, the cash account of the hire purchaser will reduce. And when there is decrease in the asset account, it is recorded as a credit entry. Therefore, we have done the same in this hypothetical example. Then the shortest narration explains being the payment of the installment. This is the way how the hire purchaser record the asset partially and according to the actual payment what they are paying slowly and gradually over the period of time. Now let's discuss how does the hire vendor record the same hire purchase agreement and related accounting entries in his books of account. So let's discuss them. On the sale of the goods, we have continued the same example. So therefore, the numerical values will remain intact, but how to mention those entries in the hire vendor accounts will be discussed shortly. On the sale of such goods, the vendor will record first entry of the sale with the title of hire purchaser account. The one who is purchasing the asset from vendor, his name along with hire purchaser account will be debited in the books of account of hire vendor. The reason is it is an account receivable type of account in the hire vendor's book, because this is the amount what the vendor has to collect from the hire purchaser. And then the vendor will make another subsequent entry regarding the sales account, which is the revenue account of the vendor. And when there is increase in the revenue, it is recorded as credit. And when there is increase in asset, which is account receivable of the vendor, it is recorded as debit with the total cash price of the asset. And the total cash price was 1,000 rupees. And the shortest narration explains being the sale of asset under hire purchase agreement. Then the vendor will make another entry on the receipts of cash down payment. The moment the vendor has received the cash amount for the down payment, the vendor will record another entry. Since the vendor has received cash, so the cash account in the vendor's book of account will increase. When there is increase in the cash account, it is recorded as debit. And in the continued example, the down payment was rupees 200. So therefore, we have mentioned rupees 200 over here. And the asset account in the books of hire vendor, which is the hire purchaser account, will reduce. And when there is decrease in asset account, it is recorded as credit. The account receivable of the hire vendor from the hire purchaser account will be collected at the time down payment has been received. And the narration says being the payment made by the hire purchaser upon down payment. Then the vendor will make two more subsequent entries. Like towards the end of the year, when the installment become due, the following entries for the interest will be passed in the hire vendor account or the seller account. So the seller or the vendor will make another entry for the interest amount to make it due or accrued. Therefore, the account receivable, which is the hire purchaser account, has been increased by rupees 25, since we knew that the amount outstanding was 800 and the interest to be paid on this amount was 3.125 per annum. And if you multiply both of these values, you will come up with the interest payment of rupees 25 for the first year. Therefore, the account receivable or interest receivable, which is the asset of the vendor account in the books of hire vendor accounts, will increase. An increase in asset is recorded as debit entry. And then subsequent revenue account will be generated, which is the interest revenue account in the books of hire vendor. Therefore, it will be credited because we knew that an increase in revenue is recorded as credit entry. Shortest narration explain. Being the interest at the rate of 3.125% per year due on rupees of 800, since this interest is applied on the outstanding balance. Here comes the last entry in the vendor's book of account upon getting the payment or receiving the installment at the end of the year. So when the installment has been received by the hire vendor or seller from the purchaser, therefore the cash will be collected, and we knew that cash is our asset account, and when there is increase in the asset account, it is recorded as debit entry. This rupees 225 consists of 200 the principal amount plus the interest payment upon the outstanding balance. So therefore, in total, the vendor will receive 225 rupees. Therefore, the cash account of the vendor will be debited because there is increase in the cash account of the vendor. And then subsequently, the vendor will write off or reduce the liability, not liability, but rather account receivable due from the hire purchaser. Therefore, the hire purchaser account, which is the account receivable in the books of account of the vendor or seller, will be reduced because we have collected this account receivable as cash. So when there is decrease in the asset of the company, it is recorded as a credit entry. We have done the same by putting a credit entry against the hire purchaser, which is account receivable in the books of vendor account. And the shortest narration says, being the receipts of installment due at first year end. So at the end of the year, the hire vendor will receive the cash payment as first year installment, which consists of the interest due plus the installment amount, which is the principal amount reimbursed or received. So by summing them up, the vendor will receive in total of rupees 225. So this is the way how in the hire purchase agreement, which is based on installment buying and selling of the goods on installment basis along with certain interest rate. So we have learned how the accounting entries are recorded in the books of hire purchaser and as well as in the books of hire vendor. Thank you very much for listening to this lecture. If you have any confusion or question, feel free to ask on KCMS. Or another way around, you can also email me on my official email address with your queries, and I'll be happy to answer your question. Thank you very much once again. Good luck for the day. Allah Hafiz.